Well, let's talk to Curtis Freeze. He's CEO of Gro-Bels Limited. He joins us from Tokyo. So we'll talk, Curtis, about your recommendations as far as Japanese assets in a moment. But this number, first of all, really smashed estimates. How do you explain it?
Well, it's very encouraging. I think it's the Japanese finally coming out of their shell. They have put off spending as long as they could. And some of it's due to the economic stimulus, but the rest is actually just pent-up demand.
Fantastic, because a lot of people are saying, hey, it is down to government stimulus, and we just simply haven't felt the effects of the stronger yen yet, and that is still to come. What are you expecting for the fourth quarter?
Well, I think the stronger yen was in that deflator. Strong yen means it's very cheap to import both raw materials and finished product. I think the yen weakening slightly since, it's only moved 2 or 3 yen, but it's in the right direction. That calms people down. And if you look at today's market move, a lot of it's in the exporters where they're expecting the yen to stabilize at these levels.
When you get GDP growth of 3.9% and you still have persistent inflation, it makes you wonder, or sorry, not inflation, deflation. How can they beat this deflation?
Well, the deflation, as I said, it's a lot about on the back of the strong yen. And that's been putting pressure on prices. Strong yen makes it very cheap to import. It makes it very cheap to supply source materials, very different from the rest of the world, with the yen having been one of the strongest currencies. Now that it's stabilized, we'd expect the deflation to stabilize as well. We're seeing asset inflation in Japan finally in the property markets. There's a lack of other demand for money, so not a lot of new need for capex. A lot of the money in the market is now going into real estate.
So do you recommend Japanese properties, Japanese assets for investors?
I do. I think the yield spread is very attractive against risk-free. Japanese bond yield is very low, and it's gone as far as it can. And so now very large investors are shifting out of Japanese bonds and into direct property where there's some inflation hedge, expecting some asset inflation.
Okay, Curtis Freeze, CEO of Gro-Bels, joining us there from Tokyo. Thank you very much.